We're going to be talking about Silicon Motion, which we haven't talked about in a while. We decided not to pull the plug on our small position in SIMO, and it looks like that was a good decision.
It may have been a really good decision.
And we'll begin by starting with this end market chart. Silicon Motion is a fabless designer of memory microcontroller chips.
Specifically NAND flash controllers, which we'll talk about what that is here in just a moment. But to give you an overview of which end market Silicon Motion participates in, its traditional business is mostly tied up with consumer, especially PCs and smartphones. They are the leading independent provider of NAND flash controllers and especially micro flash that you find in your smartphones. So that's traditionally where most of their business is. As well, a lot of automotive, obviously new cars are so-called data centers on wheels. And so they need lots of more memory to control all of the digital functions on the car, and Silicon Motion participates there. The really exciting part of this business has to do a little bit with this little company that you may have heard of called Nvidia.
So what does the NAND market look like? SK Hynix, Micron, Samsung, YMTC, and then Kioxia and SanDisk have a strategic partnership to supply the NAND market.
Yeah, this originally we put together in April of 2025. Talk about being early to the game here. For those of you that caught some of these names last April, especially SanDisk has paid off very well for you. Even if you waited until September when we did the deep dive on SanDisk, you've still done remarkably well. So congrats. But let's dig a little bit deeper because now every type of memory you can think of is sold out for 2026. There's shortages, and this is having a ripple effect through the supply chain because the memory shortage is being driven by the AI data center build out, but it's rippling through the rest of the market, that so-called bullwhip effect, economic effect. So let's delve into this a little bit more because it definitely is having an effect on suppliers to the memory IDMs themselves. So here's our supply chain. Hopefully this simplifies things a bit for you. This is taken from the new research platform where we used to have the semiconductor flow chart, which we still have and we'll still reference, but this just simplifies it into a linear flow from left to right. So we're briefly going to talk about one of the EDA and IP suppliers highlighted in green. We're going to spend the bulk of our time on a fabless designer, Silicon Motion, and all of these feed into the IDMs. This just helps illustrate for you the direction of how the money flows through the supply chain.
A lot of memory IDMs make these memory microcontroller units that Silicon Motion makes, but they also purchase them from Silicon Motion. So it puts Silicon Motion in kind of an interesting position. They're a supplier and a competitor.
Yeah, we've called this out because we've actually owned Silicon Motion now for several years. It's been kind of a long-suffering ownership cycle up until recent months. One of the primary risks is competing with their very customers. But one little caveat to that maybe we didn't focus on enough is sometimes the end customers, so if you even move one unit to the right there on this flow chart, beyond the IDMs to the actual tech equipment and device companies, let's say like a Dell, or super microcomputer even, or Pure Storage, the leader in NAND flash-based storage systems, they may tell the IDMs, hey, we know that you have a built-in controller that you develop and manufacture yourself in-house, but we would like you to include Silicon Motion in our final product, please, because they are a performance leader. And so sometimes that also works out for them, even though the IDMs technically compete. But maybe we should talk about what a NAND controller actually is in the first place. And I mentioned we briefly talk about an EDA and IP supplier as well.
Cadence Design Systems designs the interface IP for these NAND controllers.
Interesting. Cadence has actually had this for a long time now, a decade and a half. They've done a lot of in-house development to improve this IP over time, but they actually have made multiple acquisitions to get into this business. You probably know in more recent years, they made some IP acquisitions from Rhombus on the memory controller side, physical layer IP, as well as mid-2025, a small IP purchase from ARM Holding. One of the upstream dependencies for Silicon Motion would be licensing the IP from Cadence Design Systems. So if you already own Cadence and you're looking at this part of the market and the memory shortage, you actually do get some benefit from that. Maybe they report a little bit of uptick in activity this year as a result of the memory shortages. But what's a NAND flash controller? On that little circuit board picture, the Silicon Motion chip is the one that's in gray with their logo on it. Moon Titan is their product family for enterprise storage controllers. So that would be the traditional enterprise market for NAND flash. That would be like a Pure Storage, NetApp, Dell, and so on. On this little circuit board on the left is the actual interface. That's where the NAND plugs into the system. The controller, they're kind of in the middle, left center, and then the actual NAND memory chips themselves are the big black pieces on the right-hand side, about the center and towards the right of the circuit board, in case you're wondering. So Silicon Motion, this is basically a logic chip that controls the read, write, and flow of data into and out of the NAND device. That's what they do.
So Silicon Motion, as Nick mentioned at the outset, primarily focused on the consumer side, but they've made this shift into enterprise, data center, and AI infrastructure. How is that coming about?
So outside of the flash memory controllers that the IDMs produce, Silicon Motion is essentially these days, for all intents and purposes, the only merchant provider of these things. Historically, some of their competitors have been like Marvell Technology, even Broadcom, but a lot of those companies have exited some of this business. Like Marvell has very little going on in consumer end markets these days. And so it's left Silicon Motion to compete by themselves, basically, with the big memory IDMs. And so the natural next step for them would be, let's move beyond smartphones, PCs, and automotive and get into the actual secular growth trend, data centers. And notice that last bullet point on this slide. This is from their Q3 2025. Oh gosh, who could they be talking about, Casey?
The leading AI chip maker in the current quarter? It must be. Dun, dun, dun.
Again.
Nvidia.
And lo and behold, if you happen to either listen to or read through the Q3 2025 earnings call, the CEO did everything but actually name drop Nvidia. But it's not hard to figure out who they're talking about, right? In talking about the actual supply chain itself, the main risk for Silicon Motion is still that they compete with the memory IDM in-house developed and manufactured controllers for flash memory. But notice what's happening here. Because the memory IDMs are sold out, they're having to make some difficult decisions.
They only have so much capacity to produce, specifically DRAM, HBM, and now NAND is also coming into the picture. And so these companies only have so much capacity, so they have to farm out those memory controller units to a company like Silicon Motion.
We're not saying that the memory makers are completely outsourcing the controllers, but Silicon Motion is making the claim that as they have to make more difficult decisions on where to allocate their resources, they may decide to do less of the memory controllers in-house themselves.
It's a plausible scenario.
Yeah, it's very plausible.
So what's a boot drive?
In this case, we're actually talking about Nvidia Bluefield 4, which we talked about last week. Catch that update on the article we did and the video. But I mean, here's everything but the name drop, right, from the CEO on the Q3 earnings call. He specifically mentions NVLink, which is NVIDIA's interconnect solution. So there you have it. We're talking about NVIDIA here, the biggest GPU maker. They actually got qualified and designed into the Bluefield 3, the previous gen DPU. Now they're getting designed into the Bluefield 4, and they are the flash memory controller for the embedded flash on the DPU that controls the boot up operations. So every system, when you power it on, there's initial instructions to get the thing running and start operating. And so there's a little bit of flash on that system. And of course, whenever there's flash, you have to have a flash controller to do the read-write logic for that device. Bluefield 4, we're in on an NVIDIA product here. But What kind of money are we talking about for the average selling price, ASP, for the Bluefield 4 boot drive controller?
$20 to $30.
We could make tens of dollars, hundreds of dollars on this, right?
Hundreds. But it could lead to more.
That's what the CFO was saying here at the Needham Growth Conference. So Nvidia likes the performance. They like what they've seen so far from Silicon Motion. And so they're asking them to do some more design work for other systems, including potentially as that flash obviously is getting used more because of the hard disk drive shortage. Perhaps Silicon Motion can win some designs for the controllers of the high performance long-term storage devices. And as the flash maybe moves closer to the GPU over time, maybe high bandwidth flash one day in the future, maybe they can win some of the designs for those as well. So bigger opportunity potentially ahead for Silicon Motion. And they said by the end of this year, this could be 5 to 10% of their business off from essentially no revenue at all from enterprise and AI data center in the prior years.
So let's take a look at the financials a little bit. This is for Q4 2025 guidance, which is a big improvement. Revenue between 254 to 266 million, which would be a 5 to 10% increase quarter over quarter, and year over year, even more significant, about 35, 36% at the midpoint. And their gross margins have expanded pretty significantly over the last few years, and their goal in the next quarter is up to nearly 50%.
You're slowly getting back to that long-term financial model that you can see on the bottom right. And so that's been the reason in the last few months why Silicon Motion has rallied higher, because the financials are improving, but there's still room for expansion here. Notice the operating margin target for Q4 was about 19 to 20%, but they're still targeting 25% plus longer term. So there's still upside at this point. But the big question now, okay, Nvidia is now coming into the mix as a potentially large customer over the course of the next 2 to 3 years. Is Silicon Motion still a good value? Is it still a good deal? We just ran one reverse DCF scenario based off of the trailing 12-month GAAP earnings per share. The reason we used GAAP at this particular point in time is because over the last trailing 12 months, Silicon Motion is actually free cash flow negative. Business cyclicality, it's a semiconductor business. That's no surprise. So for the sake of just being able to run an estimate at all in this company, we used GAAP earnings per share.
So the GAAP earnings per share, we used $2.33, 20% earnings per share growth for 5 years with a 6% terminal growth rate, discount rate of 10%, gets us to the current share price of $110 per share.
So is it reasonable? It still could be, even after a pretty sizable run up in the last few months. Again, this is basically the only merchant supplier of NAND flash controllers outside of the IDMs. And if those IDMs are making difficult decisions on where to allocate their manufacturing capacity, perhaps that's a benefit for Silicon Motion. I think in the past, we said that this is like a small cap value, and small cap value is tough. You're in small cap value purgatory for many years, sometimes where it feels like it's just dead money, total waste of time. This is actually a company that's back in growth mode again. So we're out of small cap value purgatory. We should talk about one more item here, because this is an oddity of Silicon Motion that arose a couple of years ago now.
So initially, MaxLinear was going to merge with Silicon Motion, and then like the day of or the day before, they actually canceled that merger. And so Silicon Motion had to file a lawsuit against MaxLinear for breaking this deal. So they're still dealing with some of the effects of this 2.5 years down the road.
Yeah, they're owed a merger termination fee of $160 million, which is a very typical thing to have in any merger or acquisition deal. Any M&A has this embedded in the deal. If the acquirer breaks the terms of the deal, the acquired gets compensation for the trouble, because it actually is disruptive to a business. If you're expecting to merge with a company, you may actually make operational adjustments. Perhaps you tell some customers we're ending support for some products, or we're not going to do any design work for this product anymore, so that you start to align with the company that you're going to join. And China was the last regulatory body to approve the deal. China signed off on it. The deal was actually complete. And then MaxLinear after it was all announced that it was done, said, actually, we're canceling it. And so they're refusing to pay the 160 million, which has kept MaxLinear stock down in the dumps. We added a MaxLinear company page to the web app. If you want to look at this, they don't have the cash on hand to pay the 160 million fee. But this arbitration is supposed to be done this year. And our expectation is MaxLinear will lose this case. They have to pay Silicon Motion the money. Our opinion is tainted here because we own Silicon Motion, and maybe you do too. And so that's going to color your opinion. But to be fair, I think we should also call out MaxLinear here that whether they win or lose, they are actually inflecting back towards growth. They have also made some data center designs that maybe lead the company to growth and a return to profitability. So after this arbitration is complete and both companies can put this behind them, let's keep an eye on MaxLinear as well, because the valuation is very depressed right now.
What they did was super messed up.
It is a super weird deal. It's business. Anyways, the main point here, Silicon Motion. This is Casey excited.
Yeah, this
here.
is me excited. I am happy that you made an executive decision and kept Silicon Motion. I was kind of ready to be done.
Well, sometimes you make executive decisions like get rid of Disney and get rid of Block and get rid of PayPal.
Yeah,
We do not need to sit on these companies anymore.
that's true.
They're dead money. It's not coming back. It's been a while now. It was the right call.
Sometimes we each make good decisions.